Today I want to introduce you to the planned trade down strategy, a powerful approach to downsizing your home in a way that upsizes your life. For many people, real estate is their largest asset, yet it's often overlooked when planning for retirement. This strategy helps integrate home equity into a comprehensive wealth plan, providing more flexibility, security, and financial confidence. One of the biggest challenges facing retirees today is a lack of savings. Many Americans haven't met their intended retirement savings goals. Yet retirement often requires more income to cover lifestyle expenses, medical costs, and long-term care. On top of that, inflation and market volatility put added pressure on traditional savings accounts, creating financial uncertainty at a time when people should be enjoying life, not stressing about money. The good news? There's an often overlooked asset that can help bridge this financial gap: home equity. Over the last several years, home values have risen dramatically, creating a significant wealth opportunity. Yet for many, this wealth isn't actively working for them because it's tied up in their home. By using a planned trade down, homeowners can unlock this trapped equity, reallocate it to enhance their financial security, and reduce ongoing expenses. Moving to a smaller home means less maintenance, lower utility costs, a more manageable lifestyle, more financial flexibility in retirement. For those fortunate enough to own a home with substantial equity, this strategy provides a way to turn that house wealth into financial freedom. Selling a larger home and purchasing a smaller one can provide a tax-advantaged windfall of up to $500,000 tax-free for a married couple. While sentimental attachments to a home is often understandable, the benefits of selling often outweigh the cost of maintaining an oversized property. Less stress, lower cost, and a more flexible financial future. That's the power of the planned trade down. So how does the strategy work? A planned trade down involves selling a highly appreciated home and purchasing a smaller, more affordable home. The tax-free proceeds can then be strategically allocated to investments that generate retirement income, long-term care or life insurance, saving for future goals. The two major benefits of the strategy are lower expenses, less spent on property taxes, insurance, utilities, and maintenance, increased financial security. Cash that was tied up in home equity can now be used to protect and grow wealth in retirement. So let's look at a real-life case study. This couple she was 57, he was 59. They were still working, but it was really important to them that they wanted to be able to retire when they hit 65. They had $1 million home, and there was $150,000 remaining on their existing mortgage. They had $250,000 in savings in a 401k plan. So their net worth was $1.1 million, but a good chunk of that was made up by that home. They needed to reduce expenses now and increase savings dramatically over the next 8 years before they were going to retire. They had some different goals that they wanted to make sure they met. They wanted to be able to help their kids purchase homes at some point. They wanted the freedom to travel. They were definitely planning on having an active retirement lifestyle and wanted to have the finances for it. They were concerned about long-term care planning and financing. And again, they really were determined to retire at 65. So what ended up happening was what made the most sense for them was to sell that $1 million home, and they decided on a $500,000 home that they purchased. They got a $250,000 mortgage. They were able to move that $530,000 from the sales into savings and investments. They did have to pay $70,000 in capital gains, but they added a life insurance and long-term care policy. At 62, when she turned 62, their plan was to refinance into a reverse mortgage to eliminate their mortgage payment completely. And at that point, that's when they were thinking about being able to gift money to their children to help their children with their own home purchase plans. We were able to make them much more financially secure. They were able to increase their cash flow by $2,200 a month. It added liquidity and protection of $530,000. They diversified their assets across multiple classes, and reduce their housing expenses by $474 a month. If this strategy sounds like a great fit for you or someone you know, I'd love to help. I work collaboratively with real estate professionals and financial advisors to develop customized trade down plans. I analyze different trade down scenarios with our robust trade down strategy calculator. I ensure clients not only buy smart, but also borrow smart, maximizing your wealth building potential. I'll work with your team or help you to create a team to tailor strategies to optimize tax savings, investment opportunities, and long-term planning solutions. Let's connect and see how we can transform home equity into financial security.